Greetings, everybody. Welcome to the, hang on. Looks like I'm having a little trouble getting one of these to connect. Oh my gosh. Well, welcome to Liberty Call. I'll have to add this to Facebook later. I am Raymond Dalton, your humble host. It is Friday, May 26, 2023. Hope everybody's having a fantastic day out there. Apologize for being a little bit late. My wife had the day off since it's a holiday weekend for her company, and spent the afternoon with her. It was quite lovely, and we went out and had some lunch and just did some running around up in Denver. So anyways, I hope everybody's having a good day out there. And if it's your first time watching Liberty Call, please give me some thumbs up, likes, shares, subscribes, follows, all that good stuff. I would greatly appreciate it. And let's go ahead and jump into the numbers for today. Let's see here. All right. The Dow Jones was up 1%, 328 points, closed at 33,093. S&P 500 was up 1.3%, closed at 4205. NASDAQ was up 2.19%, closed at 12,975. Let's see here. The VIX was down 6.22% today, closed at 1795. Canada was up 0.74%. Brazil was up 0.77%. Italy up Mexico up 0.52%. Their flags are very similar. I'm sorry. Let's see here. Across the pond over in Europe, Germany was up 1.2%, UK up 0.74%, France up 1.24%, Netherlands up 1.68%, Spain up 0.82%, Italy up 1.16%, Switzerland up 0.96%, and Portugal was strangely down 0.39% for the day. Russian exchanges both in the green. MOEX up 1.21, RTSI up 1.46. And the overnights in Asia, the Nikkei in Japan was up 0.37%. Australia was up 0.23%. New Zealand down 1.11%. In China, the Shanghai was up 0.35%. The Shenzhen Component up 0.12%. The China A50 down 0.21%. DJ Shanghai up 0.38%. Hang Seng down 1.93%. And the Taiwan weighted up 1.31% for the day. All right, well, let's go ahead and check out and see how the stocks or the markets did for the week. Starting out with the S&P 500, looks like it's going to finish the week off barely up, about 0.35%. The Dow Jones, it's going to finish the week off in the red, down about 0.94%. NASDAQ, start right there. It's going to finish off up about 3.5%. Dow Transports, finish off down about 0.57%. And the Dow Utilities, down about 2.5%. So all in all, not a terrible week, with all the consternation going on. Let's go ahead and take a quick look and see how the markets are shaping up right now. Going back to the beginning of this downturn, we've been in for 17 months at this point. So, like I said, we've been in this downtrend. We broke through, we broke the resistance here in early January, but have really just been sideways ever since. And we have not, from the way it looks, broken through the previous high that we were at in early February. And we haven't really tested this new low right here. So, again, just really been in this channel for February, March, April, and now most of May. We've just been sideways. So curious to see what happens once the markets or once the Fed makes a decision on what they're going to do, and we'll go from there. So, anyways, all right. Well, let me shrink that down, close that. Let's go ahead and get into this week's economic data that came out. All right. Too far over. This way. All right. Get my chair straight. Or I could just turn that a little bit. Oh, no. Turn it the other way. Hey, look at that. It's all blurry. All righty. Here we are. Initial jobless claims came in at 229,000. Forecast was 250. Last week's number was 225, so we grew by 4,000. Continuing jobless claims came in at 1.794 million. Forecast was 1.8 million. Last week's number was 1.799 million, so we dropped by 5,000 there. The U.S. purchasing or Composite Purchasing Managers Index came in at a 54.5. The forecast was 50. Previous number was a 53.4. So they were expecting a contraction from last month's number, but it actually grew. Weird. New home sales came in at 683,000. Forecast was 663, so better than forecast. Last month's number was 656. And the month-over-month number, we actually grew by 4.1%. The forecast was 3.3. Last month's number was a 4. GDP was revised up for the first quarter. When it was reported last month, it was a 1.1%. Grew actually at the revised numbers 1.3. The consumer sentiment came in at 59.2. Forecast was 57.9. Last month's number was a 63.5. So we did drop quite a bit, but not as bad as the forecast. Income and expenditures. Personal income month over month grew by 0.4%, right on forecast. Last month's number was a 0.3. But personal spending grew at a 0.8% range. So we actually lost. If it, back here, if it grew, if income grew by 4%, but spending grew by 8, it's a negative net 0.4. Forecast was a 0.4 growth on spending, and last month's number was a growth of 0.1. So it did increase by a little bit. Durable goods orders month over month grew at 1.1%. Forecast was a negative 1. Last month's number was 3.3%. All right, so that was everything for the data for the week. So, most things look pretty good above forecasts. But again, it's kind of like, just waiting for the next shoe to drop. All right, let's go to the market recap. Dow ends week lower despite rally on debt ceiling optimism. All right, despite a rally on Friday, the Dow ended the week lower, but investor optimism grew as negotiations in Washington appeared to be nearing a breakthrough in the debt ceiling talks. Republican and White House negotiators narrowed in on a potential debt deal that would raise the debt limit and cap federal spending for 2 years through 2024, according to media reports. That's not really 2 years. 2024 is 6 months away. The urgency to reach a deal is heightened as recent data showed the U.S. Treasury had only about $38.8 billion in cash on hand to pay its bills. Oh, no. You've only been robbing the general public for all these years. To pay its bills, significantly lower than the average balance of about $500 billion. If an agreement is announced by late Friday or Saturday, Goldman Sachs predicts it would likely lead to a House vote by late Tuesday or Wednesday. The growing optimism surrounding the debt ceiling talks bolstered investor sentiment in stock despite stronger consumer spending and inflation data, which tilted the scales in favor of a June interest rate hike. Personal spending in April exceeded economists' estimates by rising by 8%, while core PCE increased by 0.4% higher than expected. This strong showing in price pressures and consumer spending makes it increasingly difficult for the Federal Reserve to pause in June, according to Stifel. About 65% of traders now anticipate a rate hike in June compared to just 15% for the previous week, as indicated by Investing.com's Fed Rate Monitor tool. Treasury yields rose in anticipation of further rate hikes, but did not dampen optimism in interest rate sectors of the market, including technology and consumer discretionary. Big tech companies such as Meta Platforms, Apple, and Microsoft pushed the tech sector higher, while Amazon and Tesla were the top gainers in consumer discretionary. Tesla stock gained around 5% after announcing a partnership with Ford that would grant the latter access to Tesla's superchargers in the U.S. and Canada. The semiconductor sector also experienced strong gains for the second day in a row, with NVIDIA and Marvell Technology Group leading the way. Marvell Technology projected that revenue growth from artificial intelligence would at least double in the fiscal 2024, boosting investor confidence. Gap Inc. saw a 12% rally after its quarterly results showed improving margins, and Ulta Beauty faced a 13% decline as a cut to its margin outlook offset positive first quarter results. However, UBS expects Ulta Beauty to resume an upward trajectory in the long term, estimating that the company will maintain its double-digit EPS or earnings per share growth over an extended period. In other news, JP Morgan Chase gained 1% as the Wall Street Bank reportedly cut approximately 500 jobs during the week, according to sources at CNBC. All right. That's some interesting news there. And then just one last article here to finish off the week. Comes from our friends at the Mises Institute at Mises Wire. It's titled Taxation as a Weapon Against Prosperity, written by Lipton Matthews. All right. Where'd My notes go. All right, here we are. The Economist magazine recently published an editorial highlighting the positive aspects of the American economy. Despite facing setbacks, the American economy has consistently shown a resilient recovery. The United States has maintained its position as the world's top economy, leaving many puzzled by its enduring prosperity. However, it is not unreasonable to expect less from a country that was designed to excel in business. The American Constitution fiercely protects property rights and economic freedom, which are deeply ingrained in the legal system. This strong respect for property rights has led to corporations being considered as people, allowing them to defend themselves against government intrusion. Consequently, American companies can be more agile and responsive to market changes as they are less constrained by government interference. Well, supposedly. That's the way it's supposed to work. One example of this flexibility is the principle of at-will employment, which enables American companies to easily hire and fire workers, ensuring efficient allocation of labor and capital. Companies are not burdened with preserving jobs that no longer add value and can focus on attracting new talent to enhance productivity. This regulatory environment makes the United States as an attractive destination for investors. Well, unless you run a union shop, and unions are just another layer of government, which I'm not. I mean, there was a time where unions were really helpful, especially about 100 years ago, where they were really taking advantage of workers and in crappy conditions they had to work in. I have no problem with those people unionizing to try and get safer work conditions, better pay, that sort of stuff. But just have a union for the sake of a union, like the teachers, the post office, all this stuff. I mean, why does the post office have a union? They're government employees. I mean, they don't need a union. Most of them can't even deliver mail worth of shit. All right. In addition, unlike many other countries, individuals in the United States own minerals beneath the surface of their properties. This allows homeowners and entrepreneurs to exploit these resources without excessive government intervention. Political involvement often hampers development as government entities lack the expertise to capitalize on discoveries. Entrepreneurs, on the other hand, are better equipped to expedite business processes and drive innovation. America's innovative approach to mineral development has played a significant role in accelerating the fracking revolution, benefiting ordinary people and businesses. This light regulatory environment encourages experimentation and innovation as businesses do not have to wait excessively for approval. Despite these strengths, policymakers sometimes employ taxation measures that hinder progress. While the state relies on taxation to finance its operations, excessive taxation can impede economic growth and entrepreneurship. The emerging marijuana industry, for instance, is being burdened with excessive taxes that hinder its growth potential. Some policymakers mistakenly believe that citizens have an obligation to enrich the state, resulting in policies that deprive citizens of investment capital and disposable income. Yeah, I mean, you talk to someone who works for the government their whole life, they think that they're some sort of special person because they, had a daycare job for their whole life. But, in the end, most of those jobs are do nothing and pretty much a waste of taxpayer resources. You could probably cut the police departments by 50%, get rid of almost every government agency, and life would pretty much go on as normal. This editorial argues that the state should curb its spending, promise less, and refrain from pursuing unnecessary military interventions. The government should be content with the revenue it collects from its citizens, recognizing that it is not owed anything beyond that. The intrusive nature of the IRS and its influence should be curtailed, allowing the ingenuity of the American people to drive progress and prosperity. In conclusion, the editorial emphasizes the importance of defending against government encroachment and resisting excessive taxation. It highlights the American people's ingenuity as the driving force behind the country's greatness and suggests that passive acceptance of excessive taxation will lead to economic hardship. Yeah, I totally agree. I mean, I've gotten into some discussions with people over the recent years about, I just personally hope the federal government implodes. And then the first question is, well, what would you replace it with? Nothing. I mean, you've already got a city government, a county government, and a state government over your head. How many more governments do you really need over you to tell you what to do with your life? I mean, personally, I don't need anyone to tell me not to hurt people and don't take their stuff. I mean, maybe I was raised right. I mean, my parents weren't the greatest, but if you took something that wasn't yours, you got your ass beat. And then after you got your ass beat at home, you went over to grandpa's house and he beat your ass too. So yeah, it just, in my world, it's just not something I don't need the government to tell me not to, kill people. But anyways, all right. Well, that's everything I had for the week. We got a long weekend ahead of us. I will not be in this chair on Monday. So if you tune in, I will not be here. So I'll be back Tuesday and to cover everything that happened over the weekend and what's on the agenda for next week. So hope everyone has a fantastic Memorial Day. Go watch some baseball. That's what I'm going to do, and spend some time with my wife and the puppy. and just be lazy for a couple of days. And I got a bunch of, got to cut down a bunch of slash and stuff here in my property, put it out by the curb because next June is slash pickup month where I live. So I got a bunch of, broken limbs and stuff that I got to deal with, and probably got to do some weeding and stuff like that too. So, all right. Well, hope everyone has a great weekend. I'll see you guys on Tuesday. Adios.